Market Insights webinar. We will be getting started in just a few moments. Good afternoon, everyone. Thank you for joining us today for the Connecticut Green Bank's Market Insights webinar. Today's webinar will cover our sector updates, battery storage efforts, the current legislative session, as well as a few other miscellaneous items. We will have presentations by Brian Garcia, Mackie Dykes, Delia Price, and Isabel Hazelwood. At this time, we'd just like to remind you to please submit questions using the question box on GoToMeeting, and we will answer them at the end of the presentation. We will have a copy of the presentation and a recording available by next week. So with that, I will pass it over to Brian Garcia, the President and CEO of the Connecticut Green Bank, to start.
Great. Thank you, Ed. Thanks for that introduction. Good afternoon, everyone. This is Brian Garcia. We are joined today by many of our Green Bank staff that are going to provide updates on various areas. I also wanted to thank all of you and apologize for having not held our regular quarterly webinar in January and February. So we're a bit late this time. We've been pretty aggressive in a legislative session, but hopefully we'll be able to provide some overviews of what's happening up at the Capitol. So let's go ahead and start off with an update by Mackie Dykes in terms of the commercial and industrial program. So we'll turn it over to Mackie.
Thanks, Brian, and good afternoon, everyone. So I'll start with an overview of the CI&I sector, the commercial, industrial, and institutional sector, and how we are performing with regards to our targets, which cover fiscal year 2019, so July 1st, 2018 to June 30th of 2019. So we're getting close to 3/4 of the way through. We have through our two primary products that we started the year with, CPACE and our commercial PPA, we've deployed just over $20 million into 42 projects, which, well, not all are solar. A portion of those are energy efficiency, but On the solar side, we've done 7 megawatts. And of that, just over 20 million, just over 2.5 has been public dollars, the Green Bank. So very good leverage ratio of private capital that's being deployed into these projects. I caveated my comment about the 2 products that we began the year with because we're excited about a third product that we're working. I'll talk about it in a minute, but sort of at a high level, we're excited about. While we're slightly behind the goals for the year, we're excited about some new activity that's happening that we hope will drive a lot more activity in the Green Bank CI&I sector. So next slide. So to the new collaboration that I was referencing, we started a few years ago actually working with Eversource on their Small Business Energy Advantage program. This is a fantastic program. I believe they've won national awards for it, that offers turnkey solutions for small business owners as well, although the name is somewhat misleading, small business owners as well as municipal and state buildings to access energy efficiency. So everything from the upfront audit to incentives to the contractor identification to the back end, and this is where the Green Bank comes in. They have a great financing tool for these customers. It's a 0% on bill 4-year financing product. We started working with them to try to increase the capital that was available for that, as well as reduce the cost, so that they could Eversource could spend less on. There's really no such thing as 0% money, so there was a cost in offering that to customers. So we want to reduce the cost of that so that they could repurpose those dollars into their programs. Through I won't go into the nitty-gritty of it, but through a long process, we ended up partnering with Amalgamated Bank out of New York to create a $55 million loan facility, which is supplying the capital on the back end for the Small Business Energy Advantage. It's great because we hit all our goals of there's plenty of the 55 million is enough to service the demand that the utilities anticipate, as well as some increase should it come, as well as reducing the cost and saving millions of dollars to ratepayers through this program that will then be deployed back into the energy efficiency programs. And we're able to do all that while not having to tinker with or change the customer experience and the attributes that make this program so successful. So it was really a win-win. And we look forward to continuing this collaboration and hopefully expanding it. But already have been able to take there was previously a cap of 500,000 for municipalities that they could access of this financing. Through this new collaboration, we're able to increase that cap to $1 million, which we already have one town taking advantage of. So already starting to see, in addition to the savings, other great features coming out of this. And the other new product area that we're excited about is somewhat a new product, but really an expansion of an old. Our very successful commercial property assessed clean energy CPACE program, which started in 2012 and has been focused on retrofits to existing buildings. We have expanded the availability of the product to new construction. So just very quickly, CPACE is making use of a voluntary tax assessment to finance clean energy projects, and using that tax assessment tool unlocks low-cost, long-term capital. So it's a fantastic tool for deploying capital into clean energy projects in existing buildings, and there's also a need for long-term, low-cost capital for new construction. So we have introduced a pilot program where up to 20% of the construction cost of a new building can be CPACE financing. And there's really 2 scenarios where that has an impact. One, where you already have a high-performing building, you can bring in fee-based financing. That high-performing building is key because you can't access the fee-based financing unless your building is built above what code requires. So we use the mechanism of the attractive capital to get that public policy benefit, which is the more efficient building. So where that's attractive is one where you've already got an efficient building and you want to reduce your financing costs. You can bring in fee-based financing, which can then displace some of your more expensive capital in your capital stack, either the preferred equity or more typically the mezzanine financing. Or in a situation where you just don't have enough money, you haven't been able to build a capital stack to cover the full cost, you can fill the gap with fee-based financing. And again, in both these scenarios, we're getting the public policy benefit of, rather than having to wait 15, 20, 25 years for retrofit fee-based financing to be able to come in and have an impact on the performance of these buildings by replacing the equipment that was installed at construction, we're able to get that benefit right up front by making use of the tool to induce the developers to go further. So we're very excited about this. We're in the process of reaching out to developers in the state to build awareness of this, and we're having early success, and the pipeline is growing. So if you're interested in learning more, please don't hesitate to reach out, because we're always looking for new opportunities to bring this on more folks' radar screen.
Great. Thank you, Mackie. Thank you for that update on commercial and industrial programs. It's great to see the collaboration and partnership with Eversource through the Small Business Energy Advantage. Really exciting, as well as now the new CPACE for new construction program that's going to allow more real estate developers to see CPACE as an opportunity to ensure high energy performance of their buildings. So that's great. Thank you, Mackie, for that update. All right, so we're going to switch gears here, and I'm going to provide an overview on the residential sector in terms of our progress to targets. Now, this sector includes both single family as well as multifamily financing programs. The last time we spoke on our last webinar, I spent a little time talking a bit about how we restructured ourselves as an organization and what the role of Inclusive Prosperity Capital was, the nonprofit that we helped create with DEEP and several foundations. And the programs that I'll be talking about now are being implemented by IPC, Inclusive Prosperity Capital, on behalf of the Connecticut Green Bank. So we initially had a target of $27 million in terms of capital deployed over our fiscal year. As Mackie noted, we're 9 months into our fiscal year. 5 megawatts of solar PV deployment and about 1,150 loans over the course of these respective programs. You can see that we've made quite a substantial progress in terms of where we are on those goals. Effectively, we've already met our fiscal year targets for the most part for single family and multifamily. So we're continuing to drive more investment in these sectors. So we're at about $60 million of capital deployed. We've nearly hit our solar PV deployment target, and as well as our loans. And as a result of all this, you can see the high leverage ratio of private investment to public funds. So continuing to maintain our focus on using limited public resources to attract and drive more private investment into Connecticut's green energy economy. So the team has seen steady progress with regards to the Smarty loan. It's great to see all the local contractors, energy efficiency contractors, HVAC contractors, solar PV contractors continuing to use the product and partnering with our local lenders. So it's great to see the volume and interaction and engagement with the Smarty loan product by our contractors and lenders. Of course, our partnership with Posigen and the Solar for All program is providing a solar PV lease and an energy efficiency ESA to low to moderate income families. We're seeing about 2/3 of homes that are signing up for the Solar for All product are also undertaking the energy savings agreement structure of the product, which is great to see solar PV being combined with efficiency through a financial innovation targeted at the LMI market segment. And of course, our series of multifamily programs are reaching owners in terms of solar PV and other clean energy technologies, including high efficiency heating and cooling systems, as well as health and safety improvements. One number I wanted to report out, just from my notes here, is that to date, our multifamily programs have reached about 5% of the LMI multifamily market. So lots more to do, and our team is very focused on continuing to mobilize more investment to support clean energy improvements in LMI multifamily units. Okay, all right, great. So we're going to transition here to the infrastructure team, and let me introduce Celia and Isabel, who are going to provide us overviews on how our infrastructure programs are doing. So I'll turn it over to Celia.
So good afternoon, everyone. As you can see, this slide shows the FY 2019 performance for the infrastructure sector. And the data provided here really reflects what is happening in the RSIP program, in other words, the Residential Solar Investment Program, by which we provide incentives for residential homes. And so far in FY19, we have deployed about $12.5 million of incentives, and that has leveraged about $167 million of investment in residential solar, resulting in a very high leverage ratio of 13:1. Our progress so far in this fiscal year in terms of amount of megawatts deployed is 48 megawatts, which is 82% of an updated target of 58 megawatts. So we did expand the target based on high volume, and we're already ahead of schedule on that updated target. So volume this fiscal year has been very healthy. You can also see, in terms of projects, we've deployed 5,660. That's 78% of our target in terms of number of projects. That's slightly lower than the capacity percentage, and that's because the average system size has increased and crept up to closer to 8.3 kilowatts. As I noted, the FY19 volume has been higher in prior years, and we're expecting that to continue through the end of FY19.
Sorry?
I wanted to point out, we had a question here just asking to clarify what the infrastructure sector consisted of, so what these numbers represent.
Sure. So these numbers represent just what is happening in our residential solar investment program, but we'll speak later about a battery storage incentive program for the residential market that we are proposing to PURA to get funding for. And if that is approved, that would also fall into this infrastructure sector. Continuing on with the updates on the residential solar program, as many of you know, our overall program target is 300 megawatts, and we are making very good progress on that target. We have now reached 256 megawatts of approved projects. That represents 32,570 projects. So this program since 2012 has incentivized the deployment of all of those projects, so everyone should be very proud of that achievement. We are likely to reach the 300 megawatt approval target in 8 or 9 months, roughly October or November of this year, given the current volume, which is on average over the last 12 months about 5 megawatts per month. If you are a contractor in this program, you'll know that we have been working with all of you to find out which projects may not be moving forward and may be canceled. and therefore we could take them out of this tracking count and thereby clear RCIP capacity to approve new projects and replace those that are not moving forward. So as the program gets closer to the target, we're trying to make sure that all those projects are actually going to be installed. The charts on this slide provide the trend from 2012 to 2019 on the left side in terms of fiscal year and on the right side in terms of calendar year. Both in terms of fiscal year or calendar year, our volume has been very healthy, as I mentioned, and we are likely to reach 60 megawatts or more based on either a fiscal year or calendar year view. I also wanted to note that I believe that companies are likely maintaining or ramping up volume this year, in particular because we know that the federal investment tax credit, which is a very strong federal incentive, which provides a tax credit of 30%, starts to step down in 2020 to 26% and then continues stepping down 24% in 2021, and then will go to 0 for homeowner-owned projects and down to 10% for third-party owned projects. Also, we'll speak about this in a later slide. Right now, the RCIP incentive is in place and net metering is in place, and I think contractors are trying to get projects installed while we still have a very strong policy landscape, which we hope will continue to sustain the market in the future through other means, but right now we know that these incentives at the federal and state level are very certain. So I'm now going to pass it on to Isabel Hazelwood to speak about our success in deploying residential solar among low to moderate income households and minority communities.
Thanks, Celia. So in addition to just looking at RCIP volume overall, we also strive to have an equitable distribution of the resources that we're providing in the RCIP program. So in 2015, we launched a RCIP incentive specifically for low and moderate income households. And you can see that after 2015, uptake in our lower income bands, so households earning less than 100% of the area median income, started to creep up. And over the past 3 years, it's been a fairly even split, looking at customers who are above and below that kind of baseline median income. So we're still seeing a lot of uptake in our lower income communities, which is great. We're expecting that trend to continue throughout the rest of the year. And it just goes to show that solar is having a strong impact, both penetrating these communities and also helping homeowners all over the income spectrum stabilize energy costs with solar. We can also see this trend continue if we look at the total distribution of the RCIP and not by year. So this is everything that's been deployed since 2012. And this chart is really looking at the penetration of solar by income band. So we're actually seeing a higher penetration of solar in our lower income bands. About 4.5% of households earning less than 60% of the area median income have gone solar, compared to just 3.3% of households above 120% of the area median. So again, just showing another way to look at the strong solar uptake that we're seeing in our low and moderate income communities. And then lastly, earlier this year, Tufts University released a study that looked at solar adoption nationally and found that there was lower solar adoption in communities of color than predominantly white communities. So that kind of prompted us to take another look at our RCIP data. We've never really looked at the RCIP distribution and when considering race and ethnicity. So this is an analysis that we ran in March to see how well we were doing, not only at reaching lower income households, but also communities of color. And our research found that over 2,400 households have gone solar in minority communities, and that actually when we look at the distribution of the RCIP, we're seeing higher representation of RCIP projects than there are owner-occupied households in these minority communities. So about 4% of RCIP projects are in majority Hispanic communities, compared to the 3.1% 6% of owner-occupied households, and almost 4% of RCIP projects are in majority Black census tracts compared to just 2.1% of owner-occupied households. So again, this is a really interesting finding because it's showing us that despite some serious institutional barriers such as low home ownership rates in these communities of color, the RCIP has still been successful at reaching those households, which is great to see.
Okay, and this is back to me, Celia, and we wanted to provide an update on Section 7 of Public Act 1850. As most of you know, Public Act 1850 was approved by the legislature last year, and it changed the net metering structure. So specifically, it provided for a tariff-based compensation structure for solar PV that would have replaced the current net metering structure when RCIP reached 300 megawatts, which, as we noted, would have been roughly October or November of this year, 2019. Through proceedings with the regulatory authority, PURA, on the development of these tariffs, it was realized that the utility metering and billing infrastructure for implementing these tariffs would not be ready in time. And so therefore, the Energy and Technology Committee of the legislature has proposed some provisions that would impact the implementation of this public act. So currently, the draft of House Bill 7251, which hasn't been approved by the entire legislature as of yet, would have the following provisions. So firstly, it would extend net metering to December 31, 2021. So that's roughly 2 years from what we would have likely anticipated based on the end of RCIP. And that would be a 2-year extension, as I mentioned. So the other change would be that RCIP would be extended by 50 megawatts. So that would change the RCIP target to 350 megawatts. Another provision in 7251 would be the requirement of a value of distributed generation study. So that would include solar. And the other provision would be for commercial projects. It would extend the LREC-VREC program to years 9 and 10. Currently, the LREC-VREC program was already extended to year 8. So this would provide another 2 years for the LREC-VREC program before a compensation structure based on this tariff structure would go into place. Lastly, I just wanted to note that if we do get the 50 megawatt extension for RCIP, we have been thinking about various options for how we would manage that extension. So some possibilities would be a step down in the incentives across the board. Other possibilities would be for low to moderate income incentives. We could consider creating an LMI incentive for homeowner-owned projects in addition to the third-party owned projects, which is the only LMI incentive currently available. And then lastly, we are considering requiring battery storage in order to receive an RCIP incentive on either side, either for a homeowner-owned project or a third-party owned project. So those are all possible options, but we are going to discuss all those with the contractors, in other words, the solar industry, to see what makes sense.
Great. Thank you, Celia and Isabel, for that overview of the residential solar investment program. So I just wanted to dig a little bit deeper into the policy of residential solar in Connecticut and come back to this, how Public Act 15194 worked, which was the expansion from 30 megawatts to 300 megawatts. So what allowed us to do that was Public Act 15194 created solar home renewable energy credits, or what we all know as Renewable Portfolio Standard compliance credits. As you all know, the Green Bank, for providing incentives through the RCIP, owns the renewable energy credits from these systems. And through a 15-year contract, or what's called a master purchase agreements with Eversource and Avangrid, the Connecticut Green Bank was able to essentially set a REC price over a 15-year period that allowed us to issue bonds, green bonds, meaning the revenues we expect to receive over that 15-year period of time from the sale of those SRECs, we were able to issue a bond to receive that capital today. And I'm going to talk briefly about that. And what was important about that was, given the legislative sweeps in October of 2017 that folded into FY18 and FY19, $14 million a year for each of those 2 years, as the Green Bank was paying out incentives through the RCIP and then having a legislative sweep that put the organization in a cash management stressed position. So we needed to find ways of generating revenues up front. So we issued these green bonds for the RCIP program. So let's go to the next slide. So the team, the finance team led by Bert Hunter, with support from Luis and Mike, and our legal team under the direction of Brian Farnan, were successful in pulling together these solar home renewable energy credits into an asset-backed security transaction. That is to say that we sold today the 15-year stream of solar home renewable energy credit revenue that we were expected to receive. Kestrel verifiers, along with their partner Climate Action Reserve, or CAR, verified the green bond for this asset-backed security transaction. And you can see the structure of the transaction. We issued 2 classes of bonds. One was a Kroll-rated A-, and the second was Kroll-rated BBB-. You can see the distribution there of the different bond classes, $36.8 million for Class A and $1.8 million for Class B, essentially Class B serving as a credit enhancement, giving a little bit more yield. So we had an investor who purchased all of these bonds and provided us this capital, $38.6 million, that again is allowing us to cost recover our incentive and administrative costs for the RCIP program, as well as now paying the state for the sweeps that have put us in a cash management challenged position. So this was really an important part of our sustainability plan, was to execute this SREC securitization. And we found great partners in RBC, the Royal Bank of Canada, as well as our purchaser of the green bonds. Let's go to the next slide. So just at a high level, yes, we have 2 investment-grade utility partners who are buying these solar home renewable energy credits from us in Eversource and Avangrid. We've had strong historical performance of these 2 tranches of projects. So essentially, we had about 105 megawatts of residential rooftop solar, about 14,000 households. And when we looked at the data, as you all know, we meter everything. These systems have been producing very well in terms of the P50 and P90 probabilities. We actually had to have engineers come in and test those systems as part of our asset-backed securitization. Again, fixed price contracts for those SRECs. So through our master purchase agreements with the utilities, they buy those credits from us over a 15-year period, which allows us to issue those green bonds and receive the revenues up front. And really, this is a great transaction structure, first of its kind. We've seen asset-backed securities in the lease PPA realm before, but we haven't seen it exclusively in the renewable energy credit market per se, as you're seeing here with the aggregation of residential solar renewable energy credits. So just a big shout out to everybody on the finance team, the infrastructure team, the legal team. This was a Herculean effort to get this program to this point to where we could successfully issue this $38 million green bond. And just one last slide here. I think, yeah, this is just our tombstone slide. Again, just want to thank all of our team for a great job, well done, led by Bert Hunter here on this SHREC securitization. Okay, so we're going to, Celia was alluding to it before, we're going to transition a little bit now to our battery storage efforts as we think about infrastructure. So let's go ahead and start off with Isabel on the UI grid mod pilot. We're going to be tag teaming a lot of these upcoming slides. So Isabel.
Thanks, Brian. So one of the newer things that we've been working on with United Illuminating is a pilot project in the town of Fairfield. It's a fairly innovative approach to trying to leverage some of the additional benefits that solar and other distributed energy resources can provide to the distribution system. So UI identified 2 circuits off of a substation in Fairfield where they were expecting that the customer loads on those circuits may reach the substation's capacity or potentially exceed the substation's capacity in the next few years. And so they want to see if through deploying DERs on these circuits, they can reduce the load enough to not have to make an investment in that substation. So to encourage customer adoption, they're offering a 5-cent production credit for any generation from a DER during certain peak summer periods. And they're also, Green Bank is also going to be offering an exclusive battery storage incentive for residential customers that participate in the program. So it's a really unique opportunity. There's some additional benefits for customers as well as a real opportunity to demonstrate some of the additional value that DERs can provide to our electric system. We are planning to launch a second residential campaign in the area in May, and the program is open to all customers on the circuits as well as all contractors who may have a customer in that area. It's also open to commercial customers as well as residential customers. So if you're working in the Fairfield area and you want to get involved with the pilot, please reach out to me or Anthony Clark, who's managing our participation on the commercial end, and we'd be happy to give you more information about the program.
Excellent. Thank you, Isabel. And just continuing on with this battery storage opportunity. So several years ago, the Green Bank competed in an RFP issued by the Kresge Foundation, and we were fortunate enough to win a program-related investment, a PRI, which is essentially a low-interest, long-term loan, as well as a matching grant. So we have currently $3 million in loan funding to support the deployment of combined solar PV and battery storage systems with a focus on multifamily housing and other public purpose buildings. The Kresge Foundation was focused on trying to improve resiliency, coastal resiliency, especially here when you think about the state of Connecticut and the impacts of climate change, while at the same time reducing energy costs. So we have resources available. We can be very flexible for those of you who have potential projects in these segments of the market. We are looking for opportunities to deploy this capital. So if you have projects that you think we could plug this into, please reach out to us and contact Anthony Clark at the email address there, who's administering this partnership with the Kresge Foundation. Okay, let's go ahead. So continuing on with battery storage, but thinking about this in the residential context. So as Celia was describing the question Ed raised on infrastructure, when you think about residential solar in combination with battery storage, there's an opportunity here to modernize our grid by working with households to deploy these combined systems. What you're looking at here is a graphic of 24 hours in a day and the kilowatt hours of solar PV production over an entire year. So the black bars are the consumption, the average consumption of a household. I believe this is Eversource 2016 average consumption data. So the black bar there represents what the consumption of the average household is in Connecticut. The blue and the green bars represent what's being produced by the solar PV system. In the case of the blue bar, this is what's being produced and simultaneously consumed. The green bar is what's being exported. What we see as an opportunity here to do is to package battery storage with solar production so that we can capture those green bars and shift it to more of the black bars where we're reducing demand, specifically peak demand in the 12 noon to the 8 o'clock p.m. Timeline. Let's go to the next. So what we're working on is actually a policy that was passed in 2007, Public Act 07242. It's a program called the Electric Efficiency Partners Program. The purpose of that policy is to provide end-use customers with enhanced demand-side technology. So when you think about what those technologies are, customer-side emergency dispatchable generation resources. This was 2007 when this bill was passed, so battery storage, emergency backup, customer-side renewable energy generation, and load shifting technology. So we believe that combining battery storage with a behind-the-meter residential solar PV fits the technology definition of the policy and the EAP program. And our focus is to reduce demand, specifically peak demand in Connecticut through these combined systems. The policy and its implementation and oversight by PURA, the Public Utility Regulatory Authority, requires that the projects pass a 2-to-1 payback ratio. And the way they calculate that is they use the utility cost test or the program administrator cost test, which is one of the 5 cost effectiveness tests that are conventionally used in energy efficiency programs. So you have to pass that payback test. The program that we are designing is setting a target of reducing or setting the target of deploying 30 megawatts of battery storage that will help reduce both summer and winter peak demand. So we put this as an internal target for us to try to achieve by the end of 2022. The industry, our goal, just as is noted in Public Act 15194, is to support the sustained orderly development of an industry. In that case, it's solar PV. In this case, we're combining solar PV with battery storage. So we want to see a sustainable industry be developed in the battery storage. We want to ensure, again, as Isabel talked about, that we are inclusive of these technologies. So we're going to be focusing on trying to identify opportunities for LMI communities and minority communities to participate. And we also want to identify all the different values that can come from real-time enabled demand reduction strategies that come from this combination of systems. Let's go to the next slide. So just taking a quick look at some use cases. So here what we're looking at is the summer peak month of July, and we're seeing here the pink bars reflecting, I believe we modeled this at 40% of the solar PV production is being stored in the battery for backup. The yellow bars being battery stored but being dispatched later on in the day, as you can see, as well as the green bars, getting us through that important 8 o'clock p.m. or 20-hour period, which gets us from 12 to 8 o'clock at night, the peak demand periods. So this is one use case of a time of use and backup case study. Let's go to the next one. I think that, yeah, so this one's a net export use case where we would be storing the solar PV production and then just dispatching it at the peak period of, in this case, 5 to 8 o'clock at night, just dumping all that excess or all that stored solar PV onto the grid during the time when it really needs it the most. So we're looking at these various use cases. We are having conversations with the Public Utility Regulatory Authority, DEEP, and other stakeholders through this docket that we're currently in to get support for this application. So It would be great to have the local residential solar installer community. I think what we can do, Celia and Ed, is set up some time to do a presentation and get some more feedback from the local installers about this program, because having their support as we move through this EAP process. If it's not a guaranteed process, we have to go through a regulated process. And our hope is that if we successfully get through this process, then come July 1st of this year, we'll be able to offer a battery storage incentive for all of the installs that come through the RCIP program. So let me shift it over to you, so to talk about the incentive structure that we're thinking about.
Thanks, Brian. So as Brian mentioned, we proposed a target of 30 megawatts for this program, and our proposal provides for a declining incentive block structure similar to what we have implemented for RCIP. And as you can see in the table here, for each incentive block structure, we're showing what the utility cost test ratio would be. All of them needed to be at 2-to-1 or higher. And in this case, we're showing it for a 3% discount rate, which is what the utility programs are currently using for their energy efficiency programs. But we've also calculated it at 5%, and in that case, the numbers would be a little bit lower. You can also see in the column at the far right what the proposed incentive would be based on kilowatt hours or usable energy capacity. Now that is just the basis for the incentive, but it would be further adjusted by a formula that would take other factors into account, such as not just the battery kilowatt hour rating, but also the capacity rating, as well as potentially adjusted by the solar PV capacity size, and also a requirement of the program which would limit the incentive to 50% of the total installed cost of the battery, as well as a maximum per project incentive. So currently, we would anticipate an incentive for a battery project to be roughly in the range of $3,000 to $7,000, depending on all those different parameters, which would be calculated in our program upon implementation. This next slide shows kind of a big picture of what we're trying to achieve by implementing a battery storage program. Battery storage fits very nicely with solar PV, as many of you know. It can help store solar energy when there's extra generation beyond what a household needs to be used later, as Brian was saying, when during times of peak energy demand, thereby providing more benefits to the grid, which is what we're trying to capture through this Energy Electric Efficiency Partners program by providing a UCT ratio of 2-to-1. As you can see here, we do support the deployment of energy efficiency, solar PV, and battery storage. The energy efficiency we support through a requirement that all residential solar projects have a energy efficiency audit performed, as well as through other programs, our Smarty loan, our C&I programs. Of course, the utilities have many programs that support energy efficiency deployment. So by deploying energy efficiency, solar, and battery storage, we are not only helping reduce the energy burden for families and businesses throughout Connecticut, but we're also able to increase the value of these behind-the-meter technologies to the grid, and we're enabling additional deployment of solutions for electrifying the building sector and the transportation sector to use clean electricity for more of the energy needs that we all have in the state, and thereby reducing our CO2 burden. And lastly, I just want to note that the Department of Energy and Environmental Protection is now implementing an updated framework for their cost effectiveness testing. It's called the Resource Value Framework, and it helps expand and allow for broadening of the benefits that are considered in cost-effectiveness testing. And more on that as that is developed by DEEP. Lastly, we just wanted to share with you the rough timeline that we're anticipating for this battery storage incentive program. We have been approved as a partner through that program, meaning that the Green Bank could be an administrator for deployment of technologies under the program. We are now at the step of having applied. We have submitted a technology application, so we have applied for a specific technology that we could then administer a program for. In other words, these residential batteries. And we are in the midst of interrogatories, which is essentially a fancy word for questions that the regulatory authority and other stakeholders may have to find out how we would plan to do that. So assuming that we get approved for this program, we would try to launch the program as early as July 1 of 2019 this year.
Great. Thank you, Celia. Thank you for that update. So your support on docket number 18-1235 would be very much welcomed, and we'll work with Celia and Ed and the RSIP team to have more conversations with installers as we build out the battery storage program. So let's go ahead and go to the legislative session update. So just a real quick update from the Green Bank perspective on what are some of the key priorities that we're working on this session. So Senate Bill 927 is actually proposing to broaden the Green Bank scope. Right now we are focused exclusively on clean energy. In our comprehensive plan, I think it's section 10.3 on sustainability, there's a recognition that the Green Bank model can apply to other environmental infrastructure sectors. Many of our Green Bank colleagues across the country use the Green Bank model not only to support more private investment in clean energy, but also other sectors like waste, transportation, water. This bill has come through the Banking Committee on a bipartisan basis unanimously and is making its way through the legislative process. USDA qualification, our team has been working hard over the course of the last 3 or so years to have the Green Bank qualify underneath the USDA financing programs. We met with the staff of the USDA last week in Washington, D.C., and it's our hope that through some legislative language here in Connecticut that will help ease the eligibility process for us to qualify for USDA funding, which would bring very low-cost, long-term federal capital into the state of Connecticut. We have a technical fix around our board of directors, just something that we have to clean up on non-voting members. Celia was speaking to Section 7 of Public Act 1850, all of the changes, the positive changes there that are being made. And then lastly is property tax exemption. We're working to bring more clarity to the property tax exemptions for Class 1 behind-the-meter renewable energy, predominantly solar PV. So we don't want to see local municipalities misinterpreting the statute. So we're working with the P&D committee and other third-party owners to help clean up some of those property tax issues. So that's a real quick update on the legislative session. And just kind of wrapping up here, so a couple of things. So we're saying farewell to several of our team members who have been with us for actually more than a decade. Dale Hedman, who was the managing director of our infrastructure programs, and George Bellis, who are our vice president of finance and administration, are both now officially retired. However, we are taking a little bit of their time to help us continue to make progress and to support the transitions in the respective areas that they were overseeing. Let's go to the next slide. And of course, with that comes new leadership. So Celia Price taking over the infrastructure sector programs and Jane Murphy taking over our finance programs. So we're working through this leadership transition. This is going to be a good transition. We've got George and Dale, they're supporting us through this, so you'll still see them around the office, but I'm looking forward to Celia and Jane's leadership as we move forward here as well. We've, with the elections last year, in the incoming administration, we've got farewells to 4 of our board members. Of course, Treasurer Napier, who is now Sean Wooden has taken over as treasurer. Catherine Smith, the former commissioner of DECD, who is the chair of the board. Rob Klee, who was the former commissioner of DEEP, and Gina McCarthy are all no longer on the board of the Connecticut Green Bank. But we want to thank all of them for their extraordinary service in helping us advance the Green Bank model and demonstrate how we can drive more investment into our economy to help lower the energy burden on families and businesses. And of course, with that come new designations. So Sean Wooden is the new treasurer. Bettina Brown Eyes will continue as the treasurer's representative. Bettina's been on our board for 3+ years, has contributed extraordinarily to our efforts. Deputy Commissioner Mary Sotos will be DEEP's designee to our board of directors. She is the vice chair of the board. And Benu Chandi, a director at the Department of Economic and Community Development, has joined the board on behalf of DECD. So we welcome all the new arrivals to our governance structure as well. And I think that was it in terms of some of the updates. But we'll turn it over to you, Ed.
Okay, just a moment here. So first question, could we just jump back to slide 23, please? I just want to make sure that I answered this question correctly. There was a question about the y-axis on here, and is that the watts of demand?
It's kilowatt hours.
Kilowatt hours, okay.
Production.
Per hour.
Or consumption.
Okay, all right. So just to answer that one.
Think of that over the period of an entire year, for that hour of the day.
Okay.
So the x-hour axis is the hour of the day. The y-axis is production or consumption, kilowatt hours.
Okay. At that particular hour?
Exactly.
Okay. Okay. And question here, Brian or Celia, what are the chances of HB 7251 to pass?
So it's a good question. I mean, we're all optimistic. What's been great has been watching all the groups get around a table and hammer through all the issues. So I think we are optimistic that all the elements that we just talked about will be parts of 7251. So, you know, the idea that net metering will continue for another 2 years is a big deal. You know, then the tariff beginning January 1st of 2022 is important, because at that point in time, the ITC for home ownership is, you know, 0%, and for third-party ownership is 10%. So the tariff has to adjust for reasonable rate of return compensation, so it should allow us to navigate those federal changes. So I think we're really optimistic that 7251 will pass with those broad pieces. There may be other details in there, but we think those are the key elements.
Question for Mackie. Under CPACE, what is the standard required for construction, or for, I think they meant
Baseline.
New construction.
Yeah. The baseline is what code, which recently increased to the 2015 standards. I'm blanking at it, the IECC, I'm blanking on the acronym right now. And then, so that's your baseline, and then you have to perform at least 10, you have to build a building that performs at a minimum of 10% above that code in order to be eligible for CPACE financing.
So not necessarily only 0, just it's like 10% better than code, essentially. Okay. Question for Brian. Where can I buy green bonds? Are they guaranteed by the state?
So great question. So in this example of the Shrek securitization, we had one institutional investor, an insurance company, which purchased the 15-year stream of solar home renewable energy credits. I can tell you, stay tuned. We're working to try to, say, democratize the bond market by finding ways of allowing mom and pops, everyday citizens, to purchase green bonds, green mini bonds. that we feel it's really important that we not only continue to use the tools that we have to attract private investment to help finance clean energy deployment on the buildings of our families and businesses, but we also now feel it's important that we provide opportunities for citizens to invest in the types of programs that we want to support. So stay tuned. We're working in partnership with Sustainable Connecticut, which all of you, if you aren't familiar with, you should become familiar with it. It would be great to see your communities become more sustainable, but we're working towards those ends. So stay tuned.
And I think the last one that we have here, unless any more come in, could you please confirm the target to launch the storage program? So timing and money.
So we are, as Celia walked through the timeline, so we've got our partner application approved. Green Bank is an official partner. We had to demonstrate our managerial, technical, and financial capabilities. So PURA assessed us and made a determination that we are eligible to be a partner. We're now in our technology application. Based on some prior applications in this process, it can take 6 to 12 months to work through the process. We're now 4 months into the process. Both PURA and DEEP have had a number of interrogatories or questions, as Celia stated earlier, that require us to respond. I think we've had maybe 70 questions that we've had to officially respond to on record. So if all of that goes well, we've been communicating to PURA that it's our intent as we go through our budget process now for FY 2020 that we would like to plan for launching the program, I think January 1st of 2020, assuming we get approval from PURA by July 1st of 2019, which would leave us 6 more months to get our systems in place and get organized so that we could launch in January. So that's our hope, fingers crossed. We still have to work through a regulatory process to demonstrate the value of this proposal to reduce demand, specifically peak demand through battery storage in combination with solar PV.
Thanks, Brian. And it looks like that's it for questions, and we're right up on time now. So if anyone on the line has any more questions, feel free to email one of us. And again, a recording of this presentation and a copy of the presentation will be made available sometime next week. So thanks, everyone, for joining. Have a great day.